And we're back. Man. Man, oh man. So, this is your first time watching the stream, which it probably is. My computer has been going crazy. It's been going nuts. I've been streaming, and every time I stream, I get these weird kind of glitches. If you go back to any of my streams and you're watching it, you'll see it. I need some chapstick. Also, I apologize in advance if I start sniffling a lot this stream. I've just been had the sniffles. I just have the sniffles, and I don't know why. But anyway, my computer has been messing up. I've been streaming, and it hasn't been going as planned. So I tried figuring out what the problem was. I've been working on this problem for a while now, actually. It's actually one of the reasons why I stopped streaming originally, was because I kept having this problem and I just never got to it. So I recently came back to streaming, and still the problem persisted. And long story short, I ended up isolating the problem, or what I thought was the problem. So good news, bad news. The good news is I will not be flickering in and out of my streams anymore. So I fixed the problem. I found out what it was. The bad news is, I mean, if you want to look at it like bad news, is I bought this guy. So let me see if I can open me up. There we go. Bought one of these guys. I had to get it on eBay too, because these things are running short, I guess. I don't know. I couldn't find it anywhere else. I don't even know if I wanted this one. I think I wanted this one. I don't know. It's better than what I did want. I really just wanted a replacement for the one that I had. I think I had a 3050 Ti. It's in here, actually. Yeah, I had the 3050 Ti. And turns out I didn't need it. And I found out that I didn't need it. I didn't need to get this new one because I woke up and tried a new troubleshoot, which was I plugged my computer into my TV, and the problem persisted. I could still see these like glitchy streaks, so I could tell that the thing would have still had been glitching on me, such and so forth. Anyway, I Hail Married and I bought these new cords, these new DP cords. So I've been using HDMI cords. Apparently the HDMI cords that I had were just too cheap. They weren't good enough for the resolution that I have on my computer and what my computer was trying to output. It just wasn't good enough for my system. So I bought these $40 DP cords, which is crazy to me. $40 is crazy for cords, but it is what it is. Yeah, so I got this guy. My computer is decked out. My setup is even better now too. My computer is like on a different side of my desk, and so I don't have any glitches in my mouse anymore. I think my mouse was like not tracking correctly because it had to go through so many different I don't know, the bandwidth, I don't know, whatever. What am I saying? Doesn't matter. What matters is we're back. That's what matters. So yeah, man, without further ado, we're just gonna get right back into it like we never left. So I'm not in asset classes and financial instruments. Oh, this is another thing. I was like, am I just gonna not study if I can't stream? Like, is that what we're doing? So I figured that wouldn't be the best, but I also didn't go too hard. I kind of just went over a few more things from the last time I had streamed. So I did a couple of these practice problems, as you can see over here. I got to number 6, and I was about to start answering these questions about housing prices. So, yeah. Without further ado, we're just gonna get right into it. Oops. Left my meditation timer on. Forgot to turn that off. But yeah, so Start this timer. And we're gonna get after it. Should work. Hello, hello. Yeah, should be good. Okay. So the question was, suppose housing prices across the world double. A, is society any richer for the change? So this is an interesting question. I was thinking about this. To me, is society any richer? I don't know why I'm deep in this question. I don't know why I'm thinking about this question so hard, but is society any richer for the... I'm just gonna say technically no. Well, it depends on who you're talking to. The value of the home went up. So the value of the home went up. So they do have more equity, which technically means they're richer. But if every home doubled, then technically no. I don't know. I don't know, man. I would say no. Actually. So, Let's see. Let's check my understanding. So I'm thinking about the real impact of rising asset prices, and your answer is on the right track. The real impact. Here's the quick breakdown of what you got right and refine or strengthen your response. What you got right. You're correct that homeowners gain equity while renters do not, creating winners and losers. You're also right that if homeowner sells, they usually have to buy into the same inflated market, so the net gain may be limited unless they're downsizing or moving to a cheaper region, right? Well, it could be clearer. The key idea the question is getting at is, has the productive capacity of the economy improved? Oh, is that what they're trying to get at with that? Isn't that like a key term up here? What are my key terms at? It's right here in front of me. It's literally right here in front of me. The productive capacity. This. Nominal wealth and real wealth. Interesting. Okay, so when we say richer, we mean the productive capacity. So to be rich means to have productive capacity in the sense of a society. I guess that makes sense because GDP, right? If you were to say, how do you measure how rich a society is, you would literally say GDP. You would literally, that would be like the term. And then if that's gross domestic product, which measures the productive capacity of an economy, for sure, or society, for sure. Okay, that makes sense. I need to break these questions down a little bit more. Okay, are homeowners wealthier? Yes, because they have more equity in their home. So, yes. Oh, yeah. I said that already. Okay. So we're fine there. I don't know if money is considered a financial asset though. Is it? Like physical money? I think so, yeah, actually. Wait, what am I saying? Yeah, I think so. Could be wrong here. I could be wrong here. But let me see. Lonnie takes out a bank loan and receives $50,000 cash in exchange for signing a note promising repayment over the years. Financial assets involved. A note loan agreement is a financial asset for the bank, the lender, and the entities the right for future cash flows. The $50,000 is a financial asset as well. Asset created, yes. Real assets, no. Okay, so I got it. No real assets. Is the basic point. Stocks are called equity securities. That's what I want to call it. In the form of equity securities. And yeah, shareholders' equity. Liabilities, shareholders' equity. Okay. Total current assets. I don't want to get too crazy with it. Kind of just want to. Just want to get this like it needs to be. What is the ratio of real assets to total assets? Real assets to total assets. Maybe I should. Maybe I should do it like this. Bro. Should probably do it like this. This is easier. Okay. So, let's see. So Lonnie takes out a bank loan and receives $50,000 in cash. Signs a note promising to pay the loan over 3 years. So she's got 50,000 in real assets. Lonnie uses the cash from the bank loan plus 20,000 of its own funds to finance the development of new financial planning software. So she owes 50. But let me see something. So this is shareholders' equity. Okay. I'm still a little bit fresh on these balance sheets. So clearly, Lonnie uses cash from the bank plus 20,000 of its own funds to finance the development of new financial planning software. So 20,000 worth of this software equipment. Bro, are they good? Like, whatever. Lonnie sells the software product to Microsoft, which he's got 1,500 shares of Microsoft. This is number. Oops. So hold up, kid. This don't make sense. Hold up. I don't know if I can use these numbers. He uses 1,500 shares of Microsoft stock. If she would have did that today, yes, these numbers don't make sense, so I can't use that. Oh, sells her shares of stock for $80 per share. Okay, sorry. There it is. So uses the proceeds. How does she hold up though? Oh, okay. I know this is not how it goes, but this is just what I'm gonna have to do right now. Her total current assets is. Oh no, that's still an asset because even though she used money to do it, she doesn't have the 50 on top of it though. She's got the 50 minus the 20, but she still has the 20, so it's still an asset. Okay. And these are not liabilities, so I don't get why this thing doesn't make any sense. Why is shareholder equity in... Oh, because this is from the company's perspective. From the company's perspective, it is a liability. Okay, gotcha. So really, if you think about it, it should be like this. Okay, so it's still an asset. So the property and equipment is an asset, but it counts as a negative asset. I think is how that works. If I'm reading this correctly, and I think I should do it like this. The shareholders' equity. This is a number. Debt obligation. You sold something else though. I think that's it. Basically. Birds tweet. Birds are out there singing already. Hold up. Had to go get me some coffee real quick. Okay, so this is good. I'm gonna save this and kind of see where else we're at here. Balance sheet. This is kind of more technical. It's still good, but I don't think I need to worry about this right now. This is a good question. Interesting. So this is $100,000. No, 100 million. I'm sorry. 100 million American gold certificates. A gold-backed security. Is the issue a primary or secondary market transaction? Well, primary market, I only know in the context of equity securities. I guess this is technically an equity security. So is it being created or is it being traded? I think it's being created, I guess, right? Let me see. It's a new issue. Oh, okay, right there, new issue. So it's being created. So it's on the primary market. That's what I'm gonna say. I don't want to call it an equity security. I just want to call it a security. Thought so. Let me see something real quick. So a fixed salary. I discussed the advantages and disadvantages of the following forms of managerial compensation in terms of mitigating agency problems, that is, potential conflicts of interest between managers and shareholders, right? A fixed salary. Yeah, so a fixed salary sort of ensures that the worker of a company is incentivized to continue producing good work, basically. You know, they get paid for their time to do work, clearly. Oh, wait, between managers and shareholders. Okay, so managers basically get paid, and so because they get paid. Oh, wait a minute. I gotta think about this differently. A fixed salary in terms of a manager. The disadvantage to that, the advantage is that they want to. What is the advantage? The advantage is they are incentivized. Yeah, basically incentivized to continue doing work. The disadvantage is. This is interesting. Let me think about this actually. Because salary, as it pertains to the performance of the underlying stock, I can see the advantages there. But just a regular fixed salary, I don't know how that addresses agency problems. A salary linked to the firm's profits, which is what I'm talking about. That makes sense. A fixed salary, I think, is a disadvantage. In terms of mitigating agency problems, because it doesn't. If just a fixed salary as a blanket term, I guess, doesn't do anything in terms of the relationship between the manager and the shareholders. Stock in the firm that must be held for 5 years is pretty apparent, pretty obvious. They want that stock to perform well. The stock itself, by definition, is an interest for the shareholder. So yeah, let me look at some rest of these. We know that the oversight one. Note that oversight by large institutional investors or creditors is one mechanism to reduce agency problems. Why don't individual investors in the firm have the same incentive to keep an eye on management? Actually don't know. Why don't they have an idea to keep on? Well, because they're not overseeing people. It has to do with the nature of the job, I suppose. Managers manage people, so they have more people to look after, which means their impact affects the company more, I suppose, than an individual investor. Could be wrong. The average rate of return on investments in large stocks has outpaced that on investments in treasury bills by about 7% since 1926. Why then does anyone invest in treasury bills? Because T-bills are backed by the government, thus making them intrinsically safer. They're also signed. Let's look this up. They're signed, right? So they're let me see. Yeah, debt securities issued by federal government maturing in 1 year or less. Considered very safe. Yeah, I knew this was. Yeah, backed by the government, safe. Yeah, debt obligations, how they work. You purchase the T-bill at a discount below face value. When the T-bill matures, you receive it at face value, and the difference between the purchase price and the face value, for example. Yeah, so it's backed by the government. Yeah.
Good morning, everybody. Good morning.
That's what I thought. That's what I thought.
Oh, you know what we can't do on stream? Listen to copyrighted music, and that's one of my favorite activities.
A good question. What are some advantages
Really
and
cool.
disadvantages of top-down versus bottom-up investing styles? Well, top-down means that you start with a broader
Stream now.
sector. The broader, actually, you start with asset classes. You start with broad asset classes, and you determine how you're going to invest your money through those asset classes. Then once you do that, you narrow your search down into industries, and then into sectors, and then into,
I don't know, man. You know, you can just read conspiracy theories everywhere.
I guess you can, depending on how detailed you want to get, but essentially you go down, down, down until you get to the final security. And that's the top-down method. There's some advantages and disadvantages to both. The advantages is,
Welcome. Oh, you're not seeing the warning. Are you guys seeing the
am I,
warning on
some
my,
advantages and
on my thing?
disadvantages?
If you're seeing the warning, we gotta go somewhere else. This is a wholesome stream.
Well-
Christian stream, boys. Christian stream, boys.
I suppose the disadvantage of the bottom up is,
Welcome in. For those that don't know me, my name is George Hotz.
or what is it? Is it, yeah, bottom up?
Prodigy. Like all child prodigies, people had high hopes for me, and I ended up fulfilling all those hopes. So yeah, there's that.
Hold on, let me see this. Top down versus bottom up. This is top down. Yeah, this is bottom up.
See, you gotta take yourself less seriously, but you gotta take the future seriously. I think those are difficult concepts to hold in your head.
I don't get the difference though.
No, it's not ASMR. We have to be quiet because Alex is sleeping. PyTorch has RL. Oh, I know what Torch RL. No. We're not doing decision transformers today. I'll show you what we're doing today. So, I've added, so this is Tiny Breadmaster, and I've added an option to shard across GPUs.
Oops, I had that George Hotz playing in the background. Didn't realize it had flipped over. Let me go put on a playlist real quick so it doesn't do that again. There we go. Sorry about that. So bottom-up approaches start with local or company-specific variables and then expand outward. Top-down starts with exploiting opportunities that follow market cycles, right? So we're talking about the market as a whole when we're doing top-down. We're talking about company-specific when we're doing bottom-up and working our way outwards or working our way outwards. I just don't like the names. Like top down and bottom up to me means the same thing. like just from a name standpoint. And so my brain doesn't like that. There's no real difference. It should be top down or top up is what it should be, or bottom down and bottom up. Unless they mean we're starting from the bottom and going up, or we're starting from the top and going down. Yeah, so maybe don't think of it like the triangle. Just think of it as we're starting from the top, which is the highest order, and then we're narrowing down, and then we're starting from the bottom, which is the most narrow. We're building up. Yeah, that's a better way to think about it. Central issue, I don't know what this is referring to, but I'm going to read it. The central issue is the incentive to monitor the quality of loans when originated, as well as over time. Freddie and Fannie clearly have incentive to monitor the quality. Oh, I know what this is. I should still read this though. Freddie and Fannie clearly had incentive to monitor the quality of conforming loans that they had guaranteed in their ongoing relationships with mortgage originators, gave them opportunities to evaluate track records over extended periods of time. In the subprime mortgage market, the ultimate investors in the securities, or the CDOs backed by those securities, with the disappropriate likelihood of default. Yeah. If they properly understood their exposure of default risk and the corresponding low prices they would have been willing to pay for it, these securities would have imposed discipline on the mortgage originator and servicers. Right. Okay. So I'm gonna take a quick break. Do a little game of chess, I think. Actually, no, I'm not gonna do that. I'm not gonna do that, actually. Yeah, I'm just gonna wait, actually. I'm just gonna wait. Maybe stream again a little bit later. Take a break.